Will the red hot housing market come to a screeching halt? Some data from, yes, early 2021 right now suggests that it could. Let's review that data and talk about implications coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Corhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. To say that the housing market is on fire, I mean, no pun intended there, but to say it's on fire is an understatement. I mean, the data that I saw says that, April, May timeframe, March, April, May, that about 50% of the houses that sold for above their asking price. That's crazy. I'm assuming that's some sort of record. Additionally, Zillow came out, and this was April or early May, something like that, and said that for a certain period of time in the spring, about 50% of houses were on the market for less than 7 days. That is just crazy, okay? So there should be lots of confidence with the housing market, right? The housing market is on fire. Wow, if you're a homeowner, you should be glad your house is going up in value. If and when you want to sell, you'll be able to sell it so quickly, right? All is good. Maybe not, actually. Some data is suggesting that, gosh, the housing market could come to a screeching halt. Let's dive in. I've seen lots of data suggesting, hey, there's some warning signs out there. I mean, waving sort of the yellow flag. We're in a cautionary stance with the housing market. And again, it's just baffling to me. That's just puzzling to me. And so I wanted to share that data with you. And I saw this illustration here that seems like the best summary, all right? So number one, the housing price index has absolutely skyrocketed over the past year. Prices are rising at the fastest rate in over 40 years. And you might say, well, that's because we're coming off of the pandemic, right? And everyone had to slash their housing price just to be able to sell it during the pandemic. No, that is not what happened, okay? From what I can see, that's not what happened. People didn't drop their price, and the chart actually shows that as well. Prices didn't get slashed during the pandemic, and therefore that's why we're seeing this huge increase. We just have this enormous boom happening in the housing market, likely, my opinion, because of all the stinking money that's been printed, okay? So that's number one. Second, consumer sentiment versus builder sentiment is now at its lowest level, I mean, ever since they started tracking this data. And so April's the largest decline on record ever. And so there's the greatest spread between consumers and builders. So basically, builders are losing confidence. Is that because of supply shortages, increased costs, fewer people come to the table saying, hey, I want to build? Anyway, the worst sentiment, the worst spread in history based on this measure. What about the benefits of homeownership? The ratio between owning and renting. It's never been more expensive to purchase a home relative to renting. We're past the peak of the housing market. And another way of looking at that, the house price to rent growth ratio is now, relatively, prices are rising significantly faster, the fastest rate in history. All of that leads to these final two charts then, okay? So people planning to purchase a home. April showed the largest monthly decline on record for those people looking to purchase a home, okay? And we'll get to this in just a second, but I'm not surprised. I'm not surprised as prices have gone up like crazy. People are saying, wow, I can't believe my house is worth that. And yeah, I'm not paying that for someone else's house. That just seems crazy, okay? So therefore, is it a good time to buy a house? We have had other than just right during the COVID lockdown, April was the largest drop in over 40 years for being a good time to buy a house. So I guess, why is this so important? Before we get to conclusions, why do we care? Well, number one, for on average, okay, I'm not saying this is how it should be, but I'm just saying on average, people's largest asset is their house, and people's largest monthly expense is their house. And I've said it before, the data says your largest expense in retirement is going to be your house. It's going to be your living, where you live. It's not going to be health insurance, right? And so it's an enormous asset and it's an enormous expense. If that ratio isn't right, or if the expense is really high, but the asset value is dropping, or I've got to, which is possible right now, I've got to pay so much to buy a house that the future return on that, it's going to be dropping in value. I mean, that's a scary, scary situation. That's number one. The second reason we care so much is, think about it when you move, okay? When you move, is the only thing that's impacted in the economy you got a new mortgage? No. When you move, you're typically also buying paint. You're also buying a lawnmower. You're also buying, some new furniture. Typically, there's so many kind of tag-along expenses that are beneficial to the economy that happen when someone buys and sells. If you stay in your own house, you're comfortable with that furniture, you're comfortable with the color of the carpet, the color of the walls. I mean, you're fine with that kitchen, right? But when you move into the house the new house that you buy, you're likely changing those things. And guess what? The person that just bought your house is likely changing those things too. So instead of nothing happening with that house, okay, now you're getting 2 people buying paint, 2 people buying chairs, 2 people buying furniture, buying carpet, those sorts of things. That's all economic activity that is extremely important. That's why we care. That's why we care so much at an individual level, because it's a big asset and big expense, but also from an economic standpoint, understanding how the housing market's moving is extremely important. So what do you do? I would tell you a couple of things. Number one, right, I'm in the camp that, listen, if you don't need to move, I'd be careful about moving. Yes, you can sell your house likely for a high number, but you're going to have to buy at a high number. And houses are going so quickly that you're going to have to buy before you can sell. Therefore, you know how much you're going to have to pay before you know how much you're going to get, right? That's an uncomfortable, that's a vulnerable situation. Additionally, don't buy unless you really need to. Don't move unless you really need to, because you're going to have to most likely but you're going to have to pay above ask, which means you're going to have to bring more cash to the table, and you won't be able to get financing. Likely the house won't be able to appraise for what you're going to need to buy it for, and you won't get the financing needed, so you'll have to bring more cash to the table. Your mortgage will be higher. It's just tricky. So I wouldn't move unless you have to. I mean, that's number one. If you do have to move, just be as financially careful as possible. Work with your certified financial planner. See really, what can I afford? If I have to go above ask, how do I come up with the difference there? What's the right mortgage structure for me? Should I do 15 years? Should I do 30 year? All of that sort of stuff. Make sure it all fits in your budget, so that if you do have to move right now, it doesn't create this big wedge in your financial life that you're unable to plan around, okay? Lastly, and I always say this isn't just unique to right now, but make sure that you're in a house that you're comfortable being in for a long time, right? You have no idea. Most of us, we're buying a house that fits our life today, and we know that our life is going to evolve and change. Maybe you don't have kids yet, and at some point you're going to want to move to another neighborhood that's in a certain school district, or vice versa, or whatever. But sometimes there's economic forces at work that don't line up exactly with your timing. And if you are in an area or in a spot where you say, yeah, but gosh, if by this date I have to move because of whatever reason, that's uncomfortable. That puts pressure on you, and you're not able to be as flexible to changing economic environments. My wife and I talk about this all the time. Our first house, starter house, 3-bedroom house. We moved right when we had our second child, and got a 4-bedroom house because we wanted to expand our family and so on. But listen, right now, if we weren't able to sell that house, yeah, we could have the kids bunk up. We could adapt. It was a small house. Things would be tighter, but we love the house. We're fine in that area, and we could have lived there if we needed to. So that's the approach that I would take, and so that you're not kind of backed into a corner where you're forced to do something if the economic environment doesn't quite line up. All of that, your housing decisions, one of the most important financial decisions that you make in your life. Work with your certified financial planner to make sure that your housing decision fits in priority with all of your other big financial goals and big financial priorities. So work with your CFP on that. If you don't have a CFP, you can always contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.